Coming up on Market to Market, lawmakers fan out for home districts, leaving policy to the federal agencies. We'll recap the week of news. Taking an experiment in cover crops to the next level. And commodity market analysis with Naomi Bloom next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, February 23rd edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. A win this week for ethanol. The Biden administration approved the year-round sale of E15. However, the rule goes into effect in 2025, which drew comments from renewable fuel state advocates wondering, why the delay? Secretary of Agriculture Tom Vilsack says waivers should be granted by this summer's driving season. A farming practice aimed much closer to the ground dates back to common acceptance in the U.S. from the 1860s until about the late 1950s. Cover crops have returned recently, touting benefits that include improvements to soil health. The place where new adopters raise a skeptical eyebrow is when dramatic weather cycles hit. Say in dry years, cover crops are seen as taking precious moisture, and in wet years, termination could get dicey when the planting window is small. Peter Tubbs looks at a region in Minnesota where the practice has returned in this week's cover story.
A cover crop cedar moves across a standing cornfield in the late August heat. What began as an experiment has turned into a side business for a Minnesota farmer.
I got into it by attending a meeting and a field day and listening to people that were doing it, going out in the field with the farmer afterwards and, him showing me what was happening in his field because of what he was doing. And I decided I wanted my farms to look like that too.
The soil condition or tilth of the fields Linder seeded with cover crops began to quickly evolve.
First, I saw the soil start to change. It became a little more aggregated, crumbly, chocolate cake, cottage cheese kind of thing is what people use for terms. The weed pressure was less because of having that cover and not doing the tillage on the farm. Some of the more rolling slopes that we farm, the erosion was far less. So there's a lot of visuals that made me want to continue with it.
Linder and his father began planting cover crops across all of their acres over 3 growing seasons. A change in the economics of his farm followed. Yields were steady, but margins improved after a shift in the cost of inputs. While the growing season required fewer passes across fields, different equipment was needed to maximize the efficiency.
And if not profitability, less work, because there's still a cost to putting the seed out there and doing the application. And especially today with higher interest rates and inflated machinery, that equipment is expensive to own.
The cost of machinery didn't slow Linder's adoption of cover crops. Originally dispersed by airplane, Linder is now on his second wheeled rig. This one built to serve as both a sprayer and seeder. The machine can seed cover crops into standing crops at an average of 50 acres per hour. But concerns over the cost of new equipment are only one of the hurdles the cover crop curious must clear before seeding their own fields. The plan for this field is for the winter rye, turnips, and kale to germinate before the corn harvest, and then grow until the snow comes in November. The growth should resume at snow melt and continue until the field is ready to plant in April or May, when the cover crop will be terminated. Linder's purchase of equipment provides flexibility in his seeding schedule.
And then the acres just kind of fell into place in the fall. Through some trade shows and marketing and winter meetings promoting the machine, then it just kind of went from there.
Once Linder and his father understood the improvements of the soil quality, the expansion of covered areas came quickly.
And then I try to associate some costs with each of our practices. And so even in corn mostly, if I'm a little bit less on yield, I'm usually similar in profitability. My lenders also provided me with the same answer. They have a scorecard that they come out, once a year, and they say, okay, here's your farm and here's how you compare versus your peers. And, yield was one thing that stuck out, that yes, you yield less, but you are making the same or more money than your peers.
Experienced cover crop farmers emphasize the long term when discussing benefits of covers, and also to manage expectations.
Some try it with looking for a yield return, because typically that's how us as producers are sold products, is use my product, get this many bushels. And that's not what you're accomplishing with using cover crops and less tillage. It's not a yield return. It's a profitability thing. And then a soil, keeping your soil on your farm.
The financial risks to farmers can be minimized through cost share programs. A split of the expenses of cover crop inputs can encourage producers to introduce covers to their operations. Southern Minnesota has seen growth in cover crops as a result of cost sharing.
99% of the county's corn soybean rotation. So how do we get those guys interested in some cover crops? And then that growth started in about 2016, 2017, and has moved to where it is now, where we have over 5,000 acres a year that we're funding.
In his work for the Faribault County Soil and Water District, Nathan Carr helps landowners reduce erosion and improve the county's water quality.
Our goal is to have them kind of learn themselves how it works. So what we do at the Soil and Water is, if someone comes in and they're interested in trying cover crops, it's okay, if you want to do 80 acres, we can cost share that. We'll pay for 75% of it. So then if we pay for 75%, that reduces their risk significantly to where they're able to try it, and then they can see if they get any return on the investment, or they could try it for 3 years and do it that way.
The investment calculation is more than changing input costs. Changing tillage practices can be a slow process, especially when producers have legacy equipment designed to move the soil.
Normally in our area, we're doing, making the soil black in the fall, and then working it again in the spring and planting into that. So when we're doing cover crops, we're changing that whole tillage practice as well. So our incentive payments have been $55. A year, we lock them in to do 3 years, because you're gonna have to change a tillage practice too. It's a lot of change there, so that $55 an acre is supposed to offset your risk.
One producer in a neighborhood can influence others to try cover crops on their acres.
If you drive around, it's almost like there's pockets of conservation. If one guy starts it, you start seeing a little bit more pop up around it. Andy Linder started doing some cover crops about 8-9 years ago, and then all of a sudden you started seeing some of his neighbors do it.
Interest from neighbors led Linder to begin custom planting cover crops in the region. His company can also drill seeds into fields following harvest. With improved profitability through lower input costs and fewer passes across fields, meaning lower equipment costs in the long term, cover crops are appearing on more acres of southern Minnesota. For Market to Market, I'm Peter Tubbs.
Next, the Market to Market report.
Low demand, strong production, and growing conditions in much of South America, and even oversold concerns played on the trade. For the week, the nearby wheat contract added 13 cents, while March corn lost 17 cents. Despite sparks of higher prices, a lack of exports held back the soy complex. The March contract plummeted 39 cents, and March meal fell $14.10 per ton. March cotton expanded by $1.53 per hundredweight. Over in the dairy parlor, March Class 3 milk futures went up 42 cents. The livestock market was higher. April cattle added 35 cents. March feeders strengthened $3.55, and the April lean hog contract improved $1.97. In the currency markets, the U.S. dollar index decreased by 34 ticks. April crude oil shed $1.60 per barrel. COMEX gold increased $23.50 per ounce. And the Goldman Sachs Commodity Index lost more than 2 points to settle at 552.80. Joining us now, regular market analyst Naomi Bloom. I won't say made fun of Jeff last week with a smile when we started, but it's been hard to smile. But we're going to start with something that has been able to make you smile, wheat. How can wheat rally given the cheap product and the surplus or the amount that Russia is dumping on the world market right now?
So what was interesting this week, we did see wheat have a little bit of a short covering rally, and it was more due to concerns about how the U.S. might put those sanctions on Russia in response to some of their not nice activities that they've been doing to other people.
And the
in the
two-year
world.
anniversary of
Two-year
the
anniversary of the
attack on
war.
Ukraine.
Yeah, absolutely. So we saw the short covering there. Prices are on support. And the thing with wheat is that in the world, we're still not growing enough wheat to meet demand. Global carryout continues to inch lower. But yes, we are seeing Russia still cheapest wheat out there and continuing to undersell everyone else. But the wheat prices, especially the Chicago wheat price, has been trading sideways in about a 60-cent trading range for 6 months now. I think what's also interesting is that at the end of 2023, the funds were short over 100,000 contracts of wheat. And very slowly, they've been exiting those positions to where they're only about 60,000 contracts short now. So if there is actually a piece of news that can make that wheat market work higher, the funds are in a really good position to quickly respond and quickly push prices higher. And from a technical standpoint, the more a market trades in a sideways fashion, the bigger the breakout is going to be down the road. You know, we're keeping an eye on our wheat crop here in this country. It's dry in the plains. There's not a lot of rain in sight. Watching in Russia and in China, it has been really cold there. So now we're going to be watching for signs of winter kill. So to me, it feels like the wheat market is trying to form a bottom, but we just don't have the new specific news to get it to just finally take up and rally.
How has wheat been able to shake the problems the other two commodities of corn and soybeans have been having? Because last week and the week before, the two were much more tied together. Has wheat finally separated?
Yeah, I think there was some spread trading going on between those commodities. And so the wheat, though, again, it's the funds, it's the slow exit.
Okay.
It's like watching Andy on Shawshank Redemption when he's just slowly chiseling out of his cell, and then at the yard he's dumping out the cell parts. That's like what the wheat market is doing, slow exiting by the funds. Like, nobody watch what we're doing, but we're actually exiting those positions. Meanwhile, they're distracting us by the sell-off that they're doing in the corn and soybean market. So something is brewing with wheat. Something is going to be happening.
Put the pin in all the Shawshank gifts that are going to come. I'm going to come back to that in a moment, but I need to start with a question about corn and soybeans that I think pretty much is the elephant in the room that we haven't talked about. This one comes from Matt in Iowa, and he wants to know, are we still circling the drain lower on grain, or are we close to putting the plug in the sink and perhaps bounce higher?
I think the plug got put in the sink this week. We had option expiration today, Friday, with the March grains, and a lot of times prices have a tendency to gravitate lower. We're also dealing with farmers having to do price or roll with their grain contracts, basis contracts, with first notice day approaching next week. Now, the biggest thing for corn right now, two things that I'm watching. We all know that the funds have a hefty short position, but now it's at a record amount. And the last time they were short over 300,000 contracts was 2019, 2020. And the thing to be aware of is that they went short their most amount, and then they stayed short for another 2 to 3 weeks, and then the slow exit began. And then finally the news occurred to get the market to respond, and then boom, we went higher. So from a fundamental standpoint, we have the funds severely short in the marketplace. Now, from a technical standpoint, if you look at a continuous monthly chart, front month chart of corn futures, if you look at a continuous monthly chart of just the December corn futures, with the benefit of hindsight, there was huge pennant flag formations on those charts, which then pointed to the downside. Now, today, with March corn hitting $4, that was the downside target for the March contract. For the December corn, that pennant flag formation suggested that we go to $4.50 for the downside target, and we hit it today. So now I think we're at the bottom. We're going to probably just stay here for a while. But I think the worst is behind us, and now we're going to start to look for some news to get us to go higher.
Okay, you wrote today the similar thing, but to me, I read it as we're falling, we've stopped, but I took it that you think there's possibly more room to fall. But what you just said sounds like we might be stabilizing before going high.
I think we're going to stabilize. We're at that point. We hit the downside targets. There were not a lot of sell stops that got triggered below the $4 level today. And so we're going to be watching now. We're going to be watching for weather in Brazil. So they've got that crop, the safrinha crop, over half planted. In another month, we're going to really be watching the weather down there. We're having our farmers here, thinking about, contemplating their planting pace for the spring, and is there going to be any last-minute switching of acres? The market has, in my opinion, I think we've priced in enough bearish news to last us. So think of it from an opposite perspective. If market prices were higher like they were 2 years ago, when we had $8 corn, all the news was bullish. All the charts were getting overbought. The funds were record long. And that was the point where, you couldn't find any piece of bearish news and prices surely were going to stay higher. And then everything started to fall lower. So now we're at the opposite side of that spectrum, where we've hit technical downside targets. We've got the funds with a record short position. We've priced in all the bearish news you can get. Everybody and their brother is bearish right now. So now's the time to start to be thinking proactive of, like, if people are making cash sales right now for whatever reason, you're going to want to be thinking about reownership opportunities, because by the time the market turns around and rallies, we're already going to be up 30 cents before we realize, oh, that was the low. So start to be thinking, both sides here, where we know the news is still negative. We know it's going to be hard to see $6 corn for quite some time, but we're also, I think, at the bottom now.
The $3.99 is going to scare some people, for sure, what we closed at on Friday. But let's look at beans for a minute, because do you see some of the same scenarios formulating around beans?
Yeah, so with the beans, they hit their technical downside target lower. We're back in testing the May 2023 lows. The market's oversold. Funds are short, large amounts. So we're pricing in a lot of that negativity. So now what we're going to be focusing on for the future is the new additional demand for the renewable fuels, for the biofuels. The USDA is slow to address the growing demand that's on there. They have to take baby steps on each report, but that demand is there and it's growing. We are seeing with Brazil, we know that their crop is smaller than what the USDA is saying. The USDA just has to print it. It's kind of known information for sure, but it's not as big as what they were saying. And here in our country, I do still think there's going to be a lot of last switch for acreage, because when you look at how the cotton price lately has just been screaming higher and is actually at the highs of 2022, now you have a cotton market that says, hey, don't forget about me. And a lot of those producers in the South might be wanting to plant cotton instead. So I think we're at a point where we're going to be, near the low. We just got to get some news to get this market to move higher.
So you're saying maybe more of the cotton story is a little more of a buying acres, not a we're out of U.S. cotton story.
It's a lot of things. It's low ending stocks. It's that the acres are lower than years past and they need to increase those acres. The export demand has been pretty solid. And actually, when you look at the global economy, it's not perfect, but people are still buying things. They're buying clothes, so that demand is there. And there wasn't perfect weather in portions of India and China last year, so there were needing to be relying on some imports. So cotton does have an underlying friendly story, and that's why we have cotton prices up near 95. I mean, we haven't seen that, again, since 2022. And the funds, they had been just 4 weeks ago short like 2,000 contracts in cotton, and now they're long over 70,000 contracts just in 4 weeks' time. They switched it around. So there's some acre switching happening that the market needs to wake up about.
March Class 3 milk up 2.5% this week. A harbinger of more to come?
We had a milk production report this week, and it showed that production was down 1.1%. This is the seventh month in a row that milk production has been down. And domestic demand for cheese, domestic demand for milk is just kind of constant. What's been nice is that the global dairy trade auction has had increases like the past 6 weeks, so there's some supportive news there. The front month Class 3 milk futures are up near their $18 level, with some of the summer months near $19. So it's been a wonderful recovery bounce. We have 76,000 less dairy cattle than a year ago. So, I mean, we are seeing lower production in general. So that's supportive under the market. I'm not sure what is going to be coming in the future. A lot of it depends on, are these production numbers going to stay low, or are now our milk prices high enough that they start to produce more milk again? But we'll see. But the one thing to keep in mind is that the Class 3 milk prices are up near a short-term resistance area, so they're going to need some new additional friendly news for prices to go through that, or we might see a little bit of a pullback. But overall, the fundamentals have shifted to a little bit more supportive.
Cattle on feed came out Friday afternoon. A couple of numbers stood out to me, but I'm just a person who asks questions. What did you see in the report?
So the on-feed number was expected, near the 100%. The placement number, they were looking for a lower number, like closer to 88, and it came out near 93%. So that's going to weigh on the market on Monday. The marketed number came out pretty much as expected, near 100%. With the cattle prices and the feeder cattle prices, they've had a nice recovery rally here in 2024, gaining back a lot of the losses from late 2023. So now the question is, we know the story is friendly for cattle. We know that the supplies are still tight going forward, but I don't think that today's report was enough to justify any additional push higher next week. Oh. I feel like it's going to be, enough to justify prices where they are, but to me there wasn't anything over the top friendly about it. So we'll see if we see a little profit taking next week. That's going to be what I'm keeping an eye on.
The hogs have been a story, I think, since the last time we talked, even just a month ago. That's turned into a little bit of a rally, and yes, a smile. Does the smile keep going?
So the hog futures prices, and when you look at charts, they're up near some major overhead resistance. They have had a wonderful run higher here. Our exports, they're not, top-notch, but they're not too shabby. And we have high production numbers right now. Slaughter numbers are running high. The weights are actually a little bit lower than a year ago right now. So the demand is there, especially with the signs that the production numbers are running so high. But we're also up against this major resistance on a chart. So it's going to take over the top friendly news to get it to go higher. We're going to be watching the export markets to see if it's export news that can take it through resistance. Otherwise, we might see a simple price recovery. But the hog market has been, just kind of that surprise shining star in the marketplace that, had a nice rally and none of us are really looking for it.
In the final seconds between cattle, feeders, and the hogs, is there any of those, do you think all of those have maybe hit highs for the near term?
Yeah, in the short term, I do.
Or short term, I mean,
yeah,
sorry.
Yeah, in the short term, I do. So I think that we could maybe see a little bit of profit taking next week. But again, the underlying fundamentals still supportive, so I'm not looking for anything like a crash and burn.
Thank you, Naomi Bloom. Good to see you again.
Good to see you.
Thank you so much for your time and insight. Naomi Bloom, and I want you to hold there for a moment because we are going to pause in this analysis and continue our discussion about these markets in our Market Plus segment. You can find both analysis and plus on our website of markettomarket.org. Many of the stations that carry this program may be changing when we are on your TV because of their annual pledge drives. If you believe in the service that you have trusted for nearly 5 decades, consider investing in your local public TV station to keep programs like this one in production. We thank you for your support. Next week, we look at the ticking clock on the resolution over water. Thank you so much for watching, and have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.